I'm excited to dive into this, see what you think. I don't know if you had a chance to look at it before, or take a peek at some of the analysis.
Missing sound. I was asking him what the operating margin in the highlighted sentence meant in the overall evaluation of this analysis of this company.
Sure. So let me look at the operating margin. Well, if you look at what goes into operating margin, it was increasing over the past. So let me kind of give you a couple of general statements that we could probably work down. The first one is, it really looks like it only has about a 2-year history. The numbers before that were a different company, and they're way out of the whack compared to the past 2 years. So Sure.
I'm explaining why only 2 years of data is risky here for long-term value
investors. Sure. It's too risky. Which is not what I pretty much, once I saw that, I pretty much disqualified the company for the most part. Because you don't have at least, I would imagine you want at least a 5, if not a 10-year record of good performance and increasing value, let's say. Why do you want?
Yes, I look for 5 to 10 years long, or as long as possible.
It shows consistency. It's more likely the best predictor of future behavior is past behavior. So it shows that more likely the longer period you have of stability and performance, the greater the chance the next few years will have stability and performance.
In here, I'm explaining why his statement necessarily isn't true. Just because a company has great long-term performance doesn't mean that's going to continue into the future. Mm-hmm. The reason I look for 5 to 10 years worth of data is because the company's been around for a long time. I want to see how they've performed as a public company over time. I want to read those financials. I want to see how their business model has progressed, how honest and trustworthy their management has been over time in their predictions, and how well they planned and how well they executed those plans, things like that. This is why I want to see as long of an track record as possible, and that's why he said here, when he saw that this company was pretty much brand new, only a 2 or 3 year operating record on Morningstar as a public company, he pretty much automatically disqualified them because he's learning the same mindset that I am teaching and that I have when it comes to anything as a long-term value investor. And also, this gets to his next point. GAAP and public company financials are different from private company financials.
Got it. No, those are good points. I know we're a private company, and they do a couple things that definitely doesn't follow GAAP principles just from the sales side. So that's a very interesting point. No, I didn't think about that. You're right. They were a public company in a different form before 2014 or 15, and I don't even have. And I think I noted this when I went through Morningstar. It might be a Morningstar glitch. Is the only statement that had 2015 listed was the balance sheet. The income. So if you go on Morningstar.
Here I'm telling you why that could be. Morningstar is going through the process of updating their website, so it could be a glitch in their data and their data feed where they get their information from. This also happens in smaller companies or newer companies on occasion where they only have the balance sheet and the cash flow statement. A lot of times in foreign companies, smaller companies, or newer companies, for whatever reason, due to Morningstar's data feed, they on occasion will not have the income statement on Morningstar.
Okay, I'm sure. I think they'll have a 10K for that year. I just didn't go through. One thing I did notice on the 10K, it was a lot easier to read than some of the 10Ks that we were going through.
This is because smaller companies generally have more straightforward and easy to understand financial statement.
Yeah, it was easier. It was easier to read.
Why? Because they don't have as many lawyers or accountants to find all the legal loopholes in taxes in the tax code.
Well, it's good for us, right? That's kind of what we want, simplicity. So yeah, the operating margin, for me, it's a huge negative. Basically, one other overall thing, there's not really a 5-year history. So you'll see NAs for all the 5 years, which is a big red flag again.
Again, we talk about here about why the 5 years is not having 5 years worth of data is bad. And also this company has negative operating margins over time, which are never good. You don't ever want to see that in a company you're investing in because it means they are burning through a ton of cash. In this case, the company is paying an exorbitant amount of fees and salaries to employees.
Yeah, and I tried. If you look at operating margin and the costs under the key ratios, for whatever reason, the selling and administrative is huge.
That's another problem you'll find with new IPO companies is that they are paying a lot of fees and salaries and bonuses to insiders with shareholder money, which is the case here.
I think I mentioned that on my notes. We're under the con. Yeah, SG&A. So I looked at SG&A and other. If you look at SG&A and other, it's 160% of sales. So if I sell something, SG&A takes 163% of it.
Insane.
If you go to the where is it? If you go up top, gross margin, operating margin. No, was it up? Where did I find that? Was it financial health? Oh, margin of sales. Here it is under key ratios. Look at selling and administrative expenses, 113%.
Yeah.
And then other. So you add those two together, you get, actually that's 153%.
Yeah.
You add those two together, for every dollar of sales that I make, SG&A and other takes $1.53 away.
Great explanation by him. That's exactly what it means.
Selling, yeah, I looked that up. Selling, what the hell was, what's selling, general and administrative expensive.
In other words, salaries and bonuses.
It's the cost of sales. General administrative is the everyday stuff. It's the utility bills, it's the light bills, it's the salaries of everybody. So I think they're raising their own salaries. For some reason, that number's blowing up, and it was huge before they switched companies in 2014. It was 600, almost 700% in 2014.
Think of selling general and administrative costs as the cost to keep the business running and growing. And in terms of what he's talking about here, it exploded again because of the IPO bonuses. Okay.
Yeah, that was under my cons. Is so what I kind of figured out, because the balance sheet looks great. The balance sheet, if you just took a real simple equation, say, okay, I got cash. They take my cash and you minus total liabilities, minus everything, not even the current ones, but minus everything, you're still left over with $39 million.
This company's balance sheet only looks good on first glance, which we'll get to in the next video.